Hey everybody, this is Jim at SB500chart.com. Excuse me. It's about 4:15 on July 7th, 2013, and we're going to take a look at the S&P after I read this to you. And that is that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. And one thing, it seems, it has been a theme over the past probably about a year to a year and a half, and that is the markets are going to surprise to the upside. It seems to be a pretty consistent thing. And, you know, I try to be as objective as possible, allowing for upside and downside, you know, figuring that we've been in a bull trend, but trying to keep an open mind, and yet the surprises almost always seem to be to the upside. Now, you just saw I erased a line, didn't you? You saw that. I couldn't sneak that past you. Well, I'm going to show you what I'm thinking here. As prior to today, this was the best place we could draw any kind of resistance line, and that line got taken out. So this also was something of a wedge-shaped pattern, which typically would indicate at some point down the road we would expect a falling out of this pattern to come down and to test some of the area that was maybe near where this formed. But now we break out over the top of it. So I'm gonna show you what I'm considering doing. And I'm not saying this new thing is necessarily more right than the old thing that seemed to not work. Okay, and this is what I'm going to do. I'm going to make this a parallel line, and I'm going to stick it here, and I'm going to say, let's look now to see if maybe instead of being in a rising wedge, that we ignore some of these little peaks that got put in earlier in the week and last week and on the 1st. Let's consider that maybe we have a touch on the bottom line, a touch on the top line, a touch on the bottom line, and now we are working our way up to touch this top line. You know, it sure looked as if this area at about 1654, 1655 was going to act as resistance. That got taken out today, and there's no question about it. This line really essentially goes back to this formation here while we were in this little bear flag pattern. And since it looks like my idea about an inverted head and shoulders is now questionable, I'm going to kill these little ovals that were showing those features. So what would we look for at this point? Well, to begin with, our previous high is located now at this black line. You can see that that goes back to late May. So let's see, you know, if the S&P can get over this line, then guys, it's got a ways to run. It really, you know, the next area where I would see some resistance, where I would expect resistance, would be, assuming we get over this line, would be close to 1800. Now we do have this rising line that's been broken, that was back tested twice, and I'm not saying that any such move would plow through this broken support line. But what I'm saying is there's plenty of room to run underneath this line. And if we get over this this level right here, which is at approximately 1687, then I think you've got to look at it and say, this son of a gun is just going to keep going up, at least for a while, or at least until it shows some inclination that it's going to turn down. Now you'll remember at one point we were considering the possibility of a head and shoulders top. We are so over this orange line right now, right here, that I don't really see that. This line should now provide support. So going into tomorrow and into next week, I'm going to stick now, hate to say it, but changing my mind. After all, technical analysis is a constant work in progress because the chart is always coming up with new information. It's always providing a steady stream of new stuff. So it's looking to me like we should find some resistance up here at that 1687 level. And it could be that that could correspond with a touch on this upper line, which is parallel to this bottom line now. That would put us in a channel. That would also give us something to watch out for a sign that we would be turning back down, which at some point the S&P will. It always does. It always has. We just kind of want to know when this happens, and we want also to have some type of defining feature that can show us that it has indeed taken place. Now, you'll remember that we've had situations before where we were kind of looking at what we thought were inverted head and shoulders patterns, and we would end up with a little truncated right shoulder. If this still were to work as an inverted head and shoulders pattern, and it could, then we really have no right shoulder, which I'm not really that tickled about that idea, but we don't. And if that were to take place, then we have a choice to make. Is this a neckline, or is this support line the most important feature? Because they're gonna yield different expected targets. So if we were to use this orange line as our quote neckline, and again we would have a dip, another dip, and we're missing the right shoulder. But that broke out earlier in the week, and that would give us a target of approximately 1729. However, if this is the correct resistance line, the problem being we've only really got one solid touch at it, then we would be looking at a target that measures about the same height, but you would have to place the measurement at a different breakout point, which is significantly higher, and that would have a target of approximately 1753. Now, to add a little bit more interest to this, what would happen if we drew a line over these two peaks back here and extended that forward? Well, what we end up with is a line that's very close to where our neckline for this little head and shoulders top back here in May. if we extend that forward, here's that line. Let me highlight it right here. If we extend that forward, that may also give us a little resistance up there at roughly that 1687 mark. So it's a very interesting chart. It looks like the S&P wants to go higher, but I think it's got a battle here at 1687. If it can get over that, I'm thinking we're probably not going to worry too much about this long-term support line that broke, because we've kind of been over in around this line at times in the past. It just looks to me like the market wants to head on up to the 1700s, to the mid 1700s. And this red line, just to remind you, is drawn over the tops of 2010 and 2011. This line has not been reached in about just a little bit more than 2 years. This line has not been touched. So very interesting stuff what's going on. And all I can say for right now that makes the most sense is look more at the intermediate term. Don't ignore the short term. Don't ignore the long term. But right now I think we've got a channel going. Let's see how long this can keep going. If this line breaks down here, then we're in all likelihood going to head down to this orange line. And if the orange line were to break, now then we're going to head down to 1600. But for right now, as long as this channel works, and as long as we're in between this line and this line, I would say hang with it. So that's your video for July 11th, 2013. And I guess that's something that that a technical chart reader has in common with women is, I don't mean to insult anybody, but you know the thing where they say that it's always a woman's prerogative to change her mind. Well, it's everybody's prerogative to do that very same thing. So I'm changing that top line. We're looking at a parallel channel now. Let's see how well this serves us finishing up this week and going into next week. Thanks for watching. Thanks for your support.